Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Monday, December 23rd, coming to you from Key West, actually, with tonight's Revere Roundup Daily Market Insight video. This week, of course, it's a short week. We had a full trading day today, a short day tomorrow, ending at 1 p.m. Of course, we'll still have a video going out to you guys. Christmas, markets are off. Thursday, full day. Friday, full day. So yeah, before I start, Merry Christmas to all of you who celebrate. Happy Hanukkah to the others who celebrate that. Just happy holidays in general, and good luck and happy New Year's. State of the market, we're still labeling it a short-term downtrend. When we look at the GROTECTION gauge, we have market leaders at neutral with the red sub arrow, but we are seeing some improvements in market leaders actually. Short term, still below the 21 EMA, so we have that as a red arrow. Medium term, we actually improved. S&P undercut and reclaimed the 50-day for the second day in a row. Today's day two of the rally, so we have that at neutral. Qs reclaimed the 8 and 21, so it is looking quite positive there. And long term, still above the 200-day moving averages with the green up arrow. What happened today? Mega caps and leaders strong. S&P is facing some resistance now into the 8 and the 21. 21 over 21 list up 1.16%, 16 up, one sideways, four down. So leaders were healthy today. Mega caps as well. Big 8 up 1.31%. Global 60/40 up 0.26%. And in-house for GROTECTION up 0.46%. So jumping right into the charts, starting off with the S&P 500 index. We go on the daily chart real quick. Like I talked about, we had this huge day down on FOMC as the markets priced in lesser than expected rate cuts in 2025. The next day, we tried the rally above the 50, rejected that, and then options expiration last Friday, we reclaimed the 50-day. Heading into today, this is day two of the attempted rally. Undercut the 50-day and closed strong at highs of the day. We did close below Friday's high, but we're heading into this 8 and 21 exponential moving average now. I labeled, so this is going to be key here as they're declining, especially. Oftentimes when we do have that wedge drop below the 8 and 21 exponential moving averages and below the 50, you can reclaim the 50, but oftentimes that is met with declining 8 and 21, and that can often act as resistance, putting a lower high, which then resolves to the downside. So that is not what we want to see. We have the 50-day below us. Today's lows and yesterday's lows are key. And then we have 6,000 above with the 8 and 21. Equal weighted index, definitely a lot weaker. Not 8 and 21 closed and crossed below the 50-day with the 50-day declining. It just paints the picture that the larger cap weighted stocks are holding up the markets, and the S&P 594 or 592, whatever you want to call it, definitely a lot weaker. You can see distribution come into the picture as well. You have some distribution days, back-to-back ones. You have another back-to-back set of distribution days, another one here, another back-to-back as well. So I can count that's 1, 2, 3, 4, 5, 6, 7 of them within this 3-week period. That's definitely a negative sign. Qs actually did not reclaim the 8, but did reclaim the 21 and held the 50. Tech is definitely stronger, as we see with the mega cap tech and other tech names in our 21 over 21 list. QQEW, weaker like as we expect. Below the 50, 8 and 21. Held the 200-day, but just sitting here really doing nothing right now. Hasn't even tried to bounce really. Still day two of the attempted rally, but the 8 EMA is about to cross the 50-day. So this is definitely going to need a lot more time for this action to resolve back to the upside. The Dow, pretty much same thing as the equal weighted indexes, below the 8, 21, and 50. Mid caps as well. And small caps weak as well. And a huge contributor to the weakness in breadth in the small and mid cap regions of the markets are the higher interest rates and a strong dollar, which we'll cover in a second. VIX, we love to see this collapse below 20. We're actually getting to that 15 range. And as I talked about before, this 10 to 14-ish, 15-ish is where easy dollar environments lie and the volatility dries up. So we'll see if that was the top in volatility We would love to see this get below the 200-day moving average and the 15 level again. Dollar, like I talked about, strong breakout 4 days ago. Now just flagging really tight once again. This looks like it wants to resolve to the upside. Gold continues to stay weak. You can see it's living below the 821 and 50. 8 and 21 declining, as well as the 50. This RS line has been in a downtrend as well. Silver, same thing, actually below the 200, so even weaker. Gold miners also below the 200. Just terrible action here. Nothing really to talk about. Bitcoin continues to pull back. Let me go to trading view. We found support the 50-day moving average and this previous breakout level of 93,000. The 10-week is up to about 90,000 now. So this 90K whole number in 10-week really has to hold, or else it's a break of structure, break of trend, and we can see lower prices after that. Bonds continue to be weak as expected, with rates rising once again. The 10 years almost over 4.6%, up 6 basis points today. 30 years almost back to 5%, up 5.5 basis points today. These rates are extremely strong, signaling stronger growth and or stronger inflation. And so we'll see if that inflation comes back. So far, it hasn't, reflecting the PCE data and as well as the CPI data, but it'll just be key to monitor that going forward. Get this taskbar out the way. Go back to Market Smith. Yeah, so that's it for the inter-asset correlation. And now I'll pull up the tail of the tape. VIX, as I talked about, below 20 now. CNET and Fear and Greed at 30, plus 9 from 23 from last Friday. Still operating under the bear case, sustained break below 21 EMA, and we haven't reclaimed that yet. Today's news, we had weak consumer confidence, came in weaker than expected. Today's keys, we're watching S&P, resistance versus 50, support versus 100. Qs, resistance versus 21, support versus 50, and surviving leaders. Leaders acted well today. We reclaim the 50, and we reclaim the 21 in the Qs. Day count down to the consolidation 2. Day 2 of the rally. I labeled it as 0 days above the 8. Pretty much is right there. Not above, not really below. Still 4 days below the 21 exponential moving average. Expectations still defensive. And but some strong sectors. Bond yields were up, dollars up, semis, mega caps, and quantum. Bond prices, of course, inverse to yields are down. Bitcoin was down. Bitcoin miners were down. Staples builders were down, as well as oil. No trades today. 1.00 beta, 4.82% open heat. And bottom line is mega caps and leaders strong. S&P facing resistance. So I'll quickly now go over the 21 over 21 list for you guys. Let's go right here. Start off with Avgo, which gapped out of this huge base, about 6-month base on nice earnings, 28% year over year, 51% revenue growth, 55% gross margins. You had 2 days of, you had day 1 and day 2 was extraordinary action. Then we gapped down, had an inside day, pulled back to the 8 EMA, and this U-turn pattern is really stellar here as we're looking to turn around. Volume came in, but that was operations OpEx, operations expiration, and that could often lead to higher volumes. And today we broke that high and still trending above the 8 EMA. Rocket Lab, it's a huge move, over 5x move from the low, 6x move, depending on where you measure it. We saw some ants indicators here post earnings, pulled back to the 21 EMA. We're really starting to build this flag quite nicely here. See higher lows, lower highs. If we get above last week's high, this reversal high from FOMC, this likely could be off to the races again. And space has been a theme, especially with Elon being involved in the government. A-Lab, another semis name, stays strong. Makes a new all-time high today, actually. This is one we've been tracking. One of the strongest relative strength names, barely budging on the FOMC day. Tesla did budge, however. We are still above the 21 exponential moving average, which is almost above 400 now. And just hovering and we continue to find support at previous all-time highs of that 415 area. And this can continue to flag sideways here. 21 EMA catching up. This could be a continuation opportunity. Expedia, another relative strength name, RS 90. RSI is looking to break out above the 8 and 21. CLS, perfect post earnings gap action, just trending above the 8 and 21 exponential moving averages. This is why we use moving averages because it takes out the guesswork, it removes emotion, and gives us guidelines to trail winners. SoFi, another one. We had this perfect high tide flag out here. Saw some volatility in FOMC. This is by no means done yet. We also had an undercut reclaim. If you go on a 60-minute, you can see that much closer. Undercut reclaim. And oftentimes these can act as springs that lead to higher prices. So we'll see if we can firm up here with the setup, get back above that level, and we could be off to the races there as well. Google on this quantum willow chip gaps up, falls through, makes a new all-time high, pulls back to the 21, undercut reclaims the left side peak, and looks like we're U-turning for higher here. So that looks great. Marvell, another semiconductor chip company, gaps up, see some volatility, but continues to show RS to the S&P and the NASDAQ above 8 and 21 exponential moving averages. Twilio, same thing, reclaim the 8 and 21 today. Perfect post-earnings gap action. First test of the 21, held, undercut reclaim, we're back above the 8. RBRK, this is a gapper as well, pulling back to this gap lows area. 21 is catching up. 8 is turning over. However, this could U-turn, and this is definitely showing relative strength to many names in the market. APP, just an insane move it's had this year, 2,000% plus move. Even after being so extended on this earnings gap, it decides to run from this 228 all the way to 417, almost another double, pulls back to 21, and still holds. It's still not testing the 8. This is starting to flag here, which is getting interesting. So monitoring this. It feels extended, but often leaders will stay extended and continue to stay extended. And it's all about finding a low and logical risk spot to get into these leaders. GEV is another base that we're watching very closely, undercut reclaim. We'd love to see shakeouts in bases that can often act as springs to the upside. Really nice flat base, about 5-week flat base. And we are in this name, and we're probably going to look to add. This continues higher. On the downside, we'll talk about bros. Inside day, constructive, above the 21. Deckers, also inside day, above the 8. Reddit, inside day, pretty much just right at the 8. Ollies, pretty much inside day, super tight day, and trading above the 8. And those are the 4 down names, and that just shows that leaders are strong when our biggest down names are still above the 8 and with inside low volatility action. So with that said, I'm going to wrap it up for today's video. As always, I'd love to hear from you guys. My email is ted@revereasset.com. My Twitter is TedHZhang. Our phone is 855-REAL-WEALTH. That is 855-732-5932. Our website is revereasset.com, and our YouTube is Revere Asset. If you enjoyed this video, please like, subscribe, and even comment. That helps us deeply in the YouTube algorithms. And if you're interested in becoming a client, please reach out. And with that said, I'll wrap it up for today, Monday, December 23rd. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening, and have a great week and great holiday week to you guys. Happy holidays and Happy New Year.